If you're still missing the real move on your zero-day trades, even with the perfect setup, that's because you are ignoring where the real money is hiding. In today's class, I'm breaking down how to spot liquidity pockets in real time and why they fuel the continuation plays. And let's say if you miss the top and then you want to still catch the move, liquidity pockets is where the real money is hiding. So you want to know where the liquidity pockets are, you want to spot it, and then the main thing, how to play it, how to snipe the price when price goes back into the liquidity pocket as price going to the downside or to the upside, and how we use them for sniper entries with my PSS model. So let's get right into it. So first I'm going to show you with a quick diagram of how it actually works. So let's say price is going to the downside and then price is keep making lower lows and lower highs. And then there was some sort of liquidity sweep. Obviously at the top, this is where you usually get our plays. And then when you see me alerting some low lows or continuation plays as price going to the downside, is most of the time I see price going back into some sort of liquidity pockets and then rejecting hard. So there are two criterias where you're going to find a valid liquidity pockets. First one is, so let's say this is a zone, and as price going to the downside, so price went down and then moved a little bit higher and then moved down again, right? So this becomes a valid liquidity pocket, this top, because it broke below this prior swing lows. That means the sellers were strong enough in this zone that it pushed the price lower and price made a new swing lows. That means lower highs, lower lows. So this lower high becomes a valid liquidity pocket, which means anytime in the future, it could be in the same day, next day, or a day after, price goes back into the pocket, that becomes a valid liquidity pocket. And we're gonna look for short entries on confirmations with our PSS model to snipe the top, again, stop loss, this prior swing highs or this swing highs, right? So same goes with the upside, a valid pocket. If the swing lows right here, broke above this swing highs, that means that's a valid pocket. Any pullback into this pocket is going to be an easy buy, targeting new highs, stop loss this prior swing lows. You're obviously going to look for some confirmations in this pocket right here. So that's how you identify a valid pocket on basically any time frame. But today I'm mainly talking about intraday time frames. You can easily catch 30, 40, or even 100% plays. This thing actually works in the choppy market too, because let's say price is in this chop and then we got this liquidity sweep and then price went to the downside, broke below this swing lows here and pull back higher. That means that is still a valid liquidity pocket that helped price to made a new swing lows, and then boom, another rejection to the downside. This works for everything, for zero days, daily time frame, on weekly time frame. I'll show you a lot of example today. Just keep watching and then you'll know how you can actually use it every single day to your benefit. Now you know what is a valid pocket or not. And now the second thing is how we're gonna take our entry in that liquidity pocket right here, here, or here. So if you see price moves something like this in a 50-minute time frame where price makes lower lows and lower highs, price makes lows and then price makes highs and then price comes to the downside. But if you look at it on a smaller time frame, this leg higher will always have a move like this, where price is making higher highs, higher lows, higher highs, and higher lows. If we want to snipe the top, let's say this is liquidity pocket that formed right here. You don't want to short right away as it goes into the liquidity pocket, because there are high chances that price can keep on making higher highs and higher lows. And then the trend is actually strong. And then, but you just getting in the liquidity pocket, assuming that price should reject here, but you should not do that. But instead, you should wait for market to show you that it actually want to go down. And then for that, you need confirmation. As price goes into the liquidity pocket, you want to see some sort of liquidity sweep of prior swing highs in a smaller time frame, right? So let's say if this is a trend that you identified on 50-minute time frame, this might be in 1 minute, 2 minute, or even 5-minute time frame, right? So this is something that you have to zoom in a little bit to actually find this pattern right here. You want to see some sort of liquidity sweep or a rejection, prices breaking below prior swing lows, and then you should be active. That means there's a clear SBP. Any pullback after that or right after breaking the swing lows, that should be your entry on these zero dates. with the stop loss at this swing high, and then we're gonna catch this red leg down. That means price makes lows, lower highs. Now this lower lows, we're gonna catch leg down, targeting new swing lows because price is currently in a downtrend, and then that would we expect price to continue to do after it gave us this confirmation, right, in the smaller time frame. Again, the only reason that I wait for price to show me some sort of confirmation is solely because I want a risk level on my zero dates. That is how you would take entries on zero dates and a well liquidity pocket. So that's the two things that I quickly explained to you guys. So now I'm going to show you examples on zero dates on daily chart. I mean, 5 minute, 15-minute chart, any continuation setup we see. Again, one more thing is it can be a liquidity pocket or it could be a swing highs, right? Liquidity pocket, swing highs, it just means these are liquidity pools, right? So liquidity pocket, so let's say this is the bearish pocket, right? So this pocket means that means a lot of liquidity in this pool here. That means price is gonna go there and reject. So price can either go to swing highs on intraday time frame, sweep that, and continue the trend to the downside. That means in both cases, price is looking for liquidity to move to the opposite side, right? So that's what we're looking for in the smaller time frame. So now let's go back. There's a lot of chop in here. Let me show you some clean examples. Now this is a valid bearish liquidity pocket. Why is that? Because on a smaller time frame, that's a very clean trend to the downside. If I go into a 1 minute time frame, you would see prices in a clear downtrend, making lower lows, lower highs, lower lows, and lower highs. That means there would be some sort of liquidity pocket on a higher time frame. If price goes back into it, that's going to be an easy shot. If we look this pocket, boom, make a new lows again. That means first how price went down from here is there's going to be liquidity pocket right here on 2 minutes time frame, right? Again, you have to shuffle through time frames to actually find it. Sometimes you're going to find liquidity pockets on 1 minute, 2 minute, 5 minute. This is how you have to shuffle your time frames quickly. It doesn't take a lot of time. This is called time frame alignment. So you have to align your liquidity pockets according to the time frame. Let's say now I was trying to find it on 1 minute. That's a clear liquidity pocket that formed right here, and price went into it and rejected right away. The only reason that's a valid pocket because this swing highs made a new swing lows in price there. So lower lows, lower highs. So that means that's a valid pocket, but it doesn't mean if price goes back into it, I'm gonna short right away. I'm gonna look for some sort of continuation setups. This is the prior swing high that price made, and price swept it and closed back under it, taking lower lows and lower highs. The same technique that I was telling you guys. Boom. So now that's the confirmation, and where my stop goes. My stop goes at this swing highs. Either you take the entry right away, or you wait for price to pull back into the high value zone somewhere around here, and then take entry price going to the downside. Right, so this is that. But if you notice one more thing in the same price action is price always hunts liquidity. If you go back and see all the videos that I've made on liquidity sweeps, that I always say one thing: price just cannot move. Price just cannot reverse to the opposite direction unless it hunts liquidity on the one side. You see on right here, boom, liquidity sweep right here, liquidity sweep, and price goes to the downside. So now as price going to the downside, made a new swing lows of this swing highs. So now this becomes our valid liquidity pocket, which means if price comes back into this pocket in the future, we're going to short it again on confirmations. And you see what happened on the same day. So that's the liquidity pocket formed. Price came back into it, and what happened? Boom, another rejection, massive rejection on here. And we target the new swing lows right here. And how we're going to confirm it? Price goes into it, a clear move, and then boom, another highs, liquidity sweep right here off the swing highs, broke below the swing lows here, confirming a structure break point. This is where we get our entry and stop loss at this swing highs right here. And if you notice one more thing, from swing highs to swing lows, price pulled back again into this high value zone. We set up a stop loss at this size, and then a massive move to the downside. If you guys start implementing this in your zero dates, I'm telling you, you guys gonna find a very high reward setups with the very low risk, as you guys see. And then on top, one more thing, is I'm going to show you more examples on this. So that's a liquidity pocket. Now I'm going to show you a quick example on liquidity sweeps on the same day. So now as price going to the downside, what is this? Equal highs, price made, and then swept it right away, and then closed below. That's a clean sweep. Whenever I see this kind of setup, equal high swept, candle closing below, retesting it, that is just itself is a banker setup. Just no questions about it, no doubt about it. It's just going to work 100% of the time. And just closing below, retesting it. Most of the time, I take my entry here because the screen time that I have and the conviction that I have in my setups. But for you, if you're still learning, you want to wait for price to break below the swing lows right here and take entry with the stop loss either this swing highs or if price starts making new higher highs or higher lows, and take your entry, target this new lows here, boom, again going to the downside. Right. So again, guys, that's how the price moves, and price closed in a bearish pocket. End of the day pump where the price closed into this pocket because this is a valid pocket. You see price consolidated here, and these sellers were strong enough that they pushed the price to the downside, and then boom, pushed to the upside, and then price rejected hard, gap down right from here. This is all you need to do, identify liquidity pockets on a smaller time frame. Now let me find some more examples on a 50-minute time frame, and then we go on a smaller time frame to identify these liquidity pockets. All right, so this is a valid, yes, this is a valid pocket right here. And again, why valid? Because price consolidated in this range, broke below the swing lows right here, and then price goes back into it and then broke below this swing lows. That's your confirmation, and that's your stop loss. And my target is this swing lows right here. That's my take profit level, right? And then, but if I go into smaller time frame, it's just this is a confirmation that it gave on a higher time frame. But if I go into smaller time frame, I can show you there 100% there's going to be an example where price goes into a smaller time frame liquidity pocket, or there's a smaller time frame liquidity sweep before it dumped to the downside somewhere around here, here, and here. So let's go into the 5-minute time frame. Again, a little bit choppy, but again, what I told you earlier is this thing works on every time frame. All you have to do is just wait for confirmation and then let it play out. So this was a valid pocket right here. Let's we can go even more zoomed in right here. See, so that's the liquidity pocket formed on a smaller time frame right here. Price goes into it, rejected it, broke below swing lows, and now pulling back, easy shots with the lower lows and lower highs. So if you missed it, price formed another liquidity pocket right here, valid pocket because price made a swing lows, pulled back into it, broke below it again. That means now structural breakpoint confirmed here. My stop loss goes here, and I'm targeting the next liquidity low here, which is either this lows or this internal range liquidity low, right? So if you are guys still confused about liquidity sweeps, internal range liquidity, external range liquidity, go ahead and watch the last week video where I explained it in well detail how liquidity sweeps work. So it shouldn't be an issue for you guys on sniping the tops after watching that class and combining it with today's class. Pretty easy for you catch continuation setups on the smaller time frame. Most of people say, oh, we missed the entry, as now they just watch price going down. But the thing is, prices cannot go down in one straight line. It just cannot go like this. It has to have some sort of pullback into the liquidity pockets or a sweep on a smaller time frame, and then continuation lower, another sweep, another lows, another sweep, another lows, right? So that's how the price moves. You don't have to catch the top. Even if you miss the top, you can take your entry here, here, or here, but only if you're patient enough. Only then you want to be making money on this type of setups, right? On 5-minute time frame, yeah, sure, let me show you on 5-minute time frame too. Liquidity pocket broke below this swing lows right here, so valid pocket now, goes back into it, rejected, broke below the swing lows. Now we got our structure break confirmation. Once we break it, we put our stop loss right here, targeting this new swing lows or that any next swing lows, this external range liquidity lows. Boom, keep going down and down. If I go into even smaller time frame, it's just you're gonna see more examples. Guys, it looks good now, but the thing is, as it's happening in real time, it's gonna be a little bit harder for you guys to trade it. The only reason that I'm saying this is going to be harder is because you're going to have to wait for confirmations. That's the main thing. So now let's say this is the pocket, this is the pocket, this is the as price pocketing, right? And it just on price on the market what you want to do. Sometimes this is the pocket form, this and this pocket form, this pocket, and price is going to the upside. And let's say price met with first liquidity pocket, it doesn't have to reverse from this pocket. It can go to this pocket or even this pocket. It can go much higher, much higher. It can, break this pocket, break this one, and then go to this third pocket and then reject to the downside. So that's what I'm saying. You always have to wait for a confirmation and then get into a play. It's not like price goes into liquidity pocket and you'd be like, okay, price goes into the pocket, bull said, short the fuck out of it as it goes in the pocket and going making money. That's not how it works. Again, have to wait for confirmation, which is price breaking prior swing lows or price breaking prior swing highs, because the only reason that we do it because we want a risk level for our charts. Once we know what's my risk level on the chart, then the whole setup becomes a lot cleaner, a lot clear, and then it just gives us more conviction, and then we can actually put our money on the line on that one setup with the full conviction and confidence that it can go down from that liquidity pocket because we have the confirmation, not that it should go down just because you're assuming that it's going to go down from the liquidity pocket. Let market show you its hand, and then you pull the trigger. Right, easy money. So I'm going to show you quickly more examples on the uptrend too. So this was a valid pocket right here. This was a valid pocket because price made high highs, higher lows, higher highs, higher lows. I mean, a lot of uptrend here in this pocket. That means a lot of buyers sitting in the zone, waiting for price to push to the upside. That means price comes back into this pocket, and you're gonna wait for lower lows. I mean, higher highs and higher lows. You see right here, price made it on a smaller time frame. On this confirmation, yes, price breaking, and that's my confirmation. I'm putting my stops right under this lows here or this swing lows, and I'm targeting this swing highs. So now you would obviously ask me, this was a valid bearish pocket. Why didn't price reject here? Because there was no confirmation. Now let's go into a smaller time frame and see there was definitely no confirmation in this pocket. If we go into 5 minute or even 2 minute time frame, let's go into 2 minute time frame. That was a pretty valid liquidity pocket. Anyone could have shorted it blindly, but if you see price goes into it, tagged it, but there was no confirmation. Instead, the price is making higher highs in this. If let's say price is making lows, highs, making lows, if that was a structure breakpoint right here, only then this pocket would be valid, where I would take my trades on this structure breakpoint with a stop loss at this swing highs, targeting this swing lows, internal range liquidity, and then sell most of my position and then target the next one and then the next one. So now you see on this uptrend on the smaller time frame, we see this bullish liquidity pocket right here and the manipulation candle. This was a valid pocket, sideways action, broke above higher, this swing highs, broke above, came back to it, retested it, targeting new highs right here. Right. So again, one more right here on a smaller time frame is price came back to it, price made new highs right here, highs came back to it, boom, another move push to the upside. Now let me quickly play this so you can find more example. Another good one right here. As price going higher, this liquidity pocket right here, not right this one. We got so many examples in just one day, right? So this was not this one, but this one. Price came back again. It's the same story every single time. Price comes to liquidity pocket, bounces off it, breaking structure. This there goes our stop loss. Boom, new highs. Right here, liquidity sweep closed above, new highs again. Price came back, liquidity sweep moves higher. Again, guys, that's how exactly the price moves, regardless of the time frame. Doesn't matter if it's 1 minute, 2 minute, 5, 15, daily, weekly, monthly. That's the way the price moves. Let me show you a weekly time frame on how price moves. On that, this liquidity pocket thing also works on the higher time frame too. On the weekly, most of the time on the weekly, you'll see liquidity sweeps and stuff, but if you go in a smaller time frame, you can combine it with liquidity pockets too, and then it just works perfectly fine. Again, on the weekly time frame, if you're trading liquidity sweeps, you're gonna have a big liquidity pocket. You just cannot short off this pocket or long off this pocket. Let's say this is the massive liquidity pocket on the weekly, and that's the 30-40 point range, and you just it's pretty hard to actually get it right on the weekly time frame. So what do you do is, and then you use a time frame alignment, which means you go it on the weekly. So this is the weekly liquidity pocket. That is an almost 10 point range. You cannot you be sniping tops and bottoms with a 10 point range. So what you're gonna do then is use time frame alignment and gonna wait for price to change structure on the smaller time frame, which in this case would be the daily time frame, to actually find your lows here. So now this was the pocket. Now we're gonna refine that pocket where we can actually take our entries. So right here. So now this was we had this big pocket. So now in this pocket, we see a lot of clusterfuck candles. We don't know where the price is going to bounce in this. So now we're going to find a swing lows where the actual move started. So in this chop, the move actually started from this candle right here, this small candle we see, this one, right? So that means this buyers in this candle were strong enough, push the price to the upside, and then we got this massive move, right? So that means a lot of buyers sitting with their open sell orders in this zone. So we're gonna narrow it down to this daily pocket. You see price came to it, and then massive bounce came, but no confirmation unless we see bottom confirmation with our SBP, structure breakpoint. So now even let's go even uh, smaller time frame now on hourly time frame to confirm that this daily and weekly pocket is actually bullish, right? So you see price broke above the swing highs, confirming DRS, directional market shift, and making highs, making lows, and making highs again, confirming a structure breakpoint. That means the trend has already shifted from the bottom of this liquidity pocket where there's a big pool of buyers and the structure is confirmed now. So where's going to go next? High chances we will identify on the higher time frame, because if it's a daily time frame, weekly time frame, that means price is gonna go tag the higher time frame liquidity. And this is the big box that we have. Now this big box, if we see, have external range liquidity at the highs and external range low liquidity at the bottom. So this external range high liquidity now that we are targeting as our main target, and this is our external range in this box. So anything in between is our smaller targets. So let's say if I'm trading a smaller time frame, and then obviously price can take a couple of days to go here, and if you're an option trader, you just cannot sit in a position watching it going up 1% in one day the price, and then down 1% the next day, and then 2% up next day. So you're just going to get chopped out of your position, and your premium is going to get burned. So we use the internal range liquidity as our main targets as price moving to the upside. So in this box, so we outside the range, so that's external range liquidity. So now this swing highs becomes our external internal range liquidity, where I'm targeting price to move this highs, and this swing high. So these three levels, becomes my internal range liquidity targets where I'm going to take profits, and I'm waiting for a reversal of this liquidity pocket back into some sort of bullish liquidity pocket on a smaller time frame to get a sniper entry again, targeting this liquidity pocket and pull back into this smaller time frame liquidity pocket, and then boom, external range liquidity. And after that, I'm waiting for probably a bigger pullback into the liquidity pocket on the weekly or on the daily time frame, and then gonna catch the continuation move to the upside. Right, so pretty easy stuff. And then on the daily time frame, you see this was a valid pocket right here. And the reason, it's on, if you go in a smaller time frame, a massive move from 455 to 440. So that means, obviously sellers were present here. That's why we saw this big move in the daily pocket. And if we go in a smaller time frame, I see price goes into it, rejected on the daily time frame or on a smaller time frame too. That's my confirmation where it's going to go, this external range liquidity. And but first it's going to tag this internal range liquidities right here, and right here. So now you guys see the point now, right? So all you have to do is identify a valid liquidity pocket, Today, I mainly focused on the intraday time frame because that's what most people lack at is fail to identify it, the value liquidity pocket, and they fail to snipe it because they do not have a proper system in place. And but today, I'll clearly show you how my system works, how I identify these pockets, and the main thing is how I take my entries in those liquidity pockets. I think on last week on one single day I got like 10 trades, and this past week out of 5 days I had 4 winning days. I am ending green days because I have a system in place. I think I only have one red week since start of this year, and the only reason is because I wait for price to pull back into my zone and then get an entry using my PSS model. It's because to have actually a risk level on my place. If you guys start doing it too, you guys gonna see the result too, right? But for that, you need to back test it. You need to see it real time happening in front of you. If I can show you 1,000 more examples, that is not gonna help you. So your core need to be strong. Your basic need to be clear. This topic only then you can go ahead and catch these plays every single day. But for that, you need a lot of back testing. You need a lot of patience and discipline plus conviction on top, right? That this move is actually going to work and you're going to hold it. So today I showed you liquidity pockets, how you're going to snipe it. But if you want to hold it longer, you can go and watch the last week video where I actually showed you how you guys hold it longer after you get into an entry. Because pressing a buy or sell button is pretty easy, but to hold the actual trade to its target is a completely different skill set you need. That skill you're going to get only once we have a system in place, and then I teach you that system day after day, and especially in the last video. Go ahead and watch it after you guys are done with this one. How long did it take you to backtest this strategy before you knew it was profitable? To, I mean, guys, for me, I didn't learn trading from anyone, so it's a lot of backtesting for me. It took me almost more than 2 years to actually become profitable. But this strategy, that once I start seeing on the chart, price goes into that swing highs, rejected, price go in liquidity pocket. I think it was in my last 5 or 6 months, where I actually started to look price this way. That's how the price moves, and then just all clicked from there because we all start from somewhere. I started using RSI or MACD a lot. I still have notes in my phone where I have written if the yellow line is breaking above orange line, it's a buy position and all that. I was into that crap. But I'm telling you, if you want to learn this, you only need 6 months. 6 months is when I mastered this all, and then I'm still mastering it every day. 6 months is all you need. I think the last 6 or 8 months, actually all my losses came back after learning it after 2 years. In the first 6 months, everything I lost in 2 years came back, and now there's no way back. So again, you need to learn it. You need to learn that skill so it can pay you for your life. But for that, you need patience. You need a lot of back test. And then one good way to back test is on the weekend. Go on the Bitcoin chart. That thing is open 24/7, right? All you have to do is just go on 1 minute or 5 minute time frame. Keep identifying those liquidity pockets on 5 minute or 1 minute time frame. Keep taking setups in your head and see how it works. So I think is the more you guys gonna see, the more you guys gonna backtest real time. Only then it's gonna work. If you guys go back and look at the charts, oh, this rejected here and went down again. I'm showing you only for example purposes, but you only gonna learn once you actually in that setup. You're not gonna learn by looking at this old chart. You're only gonna learn as you are in the trade. So that's why if you cannot backtest as in the market hours, on the after hours, you go on Bitcoin chart, you have a couple of cryptocurrency charts in your watch list, and you mark out these liquidity pockets or liquidity sweeps on those time frames, and keep taking entries in your head and see, okay, this is where I take my entry, as it should go there next. Come back, check after 15-30 minutes and see if the price actually did it or not. If it did it, that means you are moving one step closer to actually mastering this. If it didn't, go ahead and go and see why it did not work and stuff. So the thing is, you need to know why it did not work more than what actually works. Once you identify why it's not working, that means the only thing that you're left with is what's going to work. That is simple. Once you identify that pattern, it's going to be much easier for you guys to only look for profitable setups, to only look for a valid setups that actually works. So that's how I did it. That was my main thing where I back tested it, all that. And I show you guys a real time how to play it, right? So not one day, but day after day I go live. Day after day I give a sniper plays in the premium. So you guys are in pretty well aware now. We've been doing this for almost 4+ years, every single day. Again, any more questions you guys have, you can comment here or you can DM me and then I'll answer you right away. Again, so that is it for today. Hope you guys like today's class. If you find this video helpful and want to master sniper entries like this daily, and make sure you subscribe for more high level content. I will see you in the next one.